Okay, let's be honest. Most of us live in a country where we do not have access to insurance, where we do not have free medical services, and we know that state will not take care of us if our business falls apart or if we go broke for any reasons or if we lose our job. So, over the course of last 11 years as a chartered accountant working in the four of the best MNCs in this world, I have learned some money lessons, most of them the hard way. Let's share them with you. I cannot stress this enough, but the first aim of anybody earning even a little sum should be having an emergency fund, accessible to anybody at any point of time. As a chartered accountant, my first job was in EY as an audit trainee, where I was required to go to clients for the audit, and it did not pay me anything for the first few months. I was only being paid $35 as a travel allowance, which I used to fill up my car tank and still managed to save around $10. Now, I know this is not enough, this is nothing, but it trained my mind that I need to save some money even if I'm making lesser and lesser money. It's easier said than done, right? Yeah. So the trick here is just to save a little sum, even if it's not much, every time you get paid through your job or every time your business pays you profits. Based on the country that you live in, you need to realize how much it requires to see a doctor if you or one of your loved ones fall ill. That should be your starting point. Now multiply that by 12, and this is the minimum emergency fund that you need to keep with yourself at any point of time. Now, once you reach that point, and it will take you a long time because this is your first job, right? You need to multiply this sum by 3 and target saving that much in your emergency fund. Why? Because seeing a doctor is not the only expense that you will incur. It's about putting clothes on your body and putting food on the table as well. This is your very first basic emergency fund requirement, and you will definitely have to give up on your some cravings just to reach this point. If you like our content so far, please consider liking this video and subscribing to our channel because that really helps us grow faster. By this time, you know exactly how much is your monthly expenses and how much you need just to keep your home afloat. Now, I need you to put this all in writing. Just jot this down on a piece of paper so that it becomes a part of record. This is the budgeting part, which most of us ignore for a very long period of time. Microsoft Excel was my savior. It was like reclaiming control of my financial journey, one cell at a time. As an example, let's look at this budget. You see, there are my living expenses, after that food and groceries, and then you have transport expenses, some casual expenses here and there, but anybody should make sure that they save something each month and not spend more than they earn. Now, picture this. When anybody of you jots down their expenses on a piece of paper, you will realize that most of your income goes towards the payment of your debts. For some of you, it will be a car installment or a bike payment. For some of you, it will look like in terms of a credit card overdue payment, or for some, it will be simply returning some borrowed money to a relative. This is the most dangerous part because it keeps swelling and brings the most anxiety. Let me tell you something here. My first car was a Suzuki Mehran, which my father bought for me. Now, it costed me nothing. So, by the time I decided to get a more expensive German car, I did not realize that I will have to make the monthly installments myself, right? And they will come out of my savings. So after a while, I started doubting my decision and thought maybe I could have gone for a slightly cheaper car and bought it with my own money rather than buying it on installments. Okay, lesson learned. So the first aim will be to save every penny to pay off my car loan as soon as I can, to avoid that interest and to just bump up my cash flow. Okay, so now you know the exact monthly needs and how much leakage is there towards your debt payments and how much you need to earn every month just to have a happy, healthy financial life. So we can start on having longer term goals, which starts with having multiple streams of income. Never rely on one source of income, even if your job is paying you tax-free $10,000 a month or your business is making way more than you need. Remember, everything in this life has an expiry date. So focus on your skills and start building that second and third and fourth passive sources of income. Over the last 11 years in my career, I have worked on 4 different startups and 3 separate income streams along with my full-time job. Again, this does not have to be a lot in the start, but remember that nothing in this life comes easy, and there are only 24 hours in a day. You will have to work extra to reach that point and give up on that sleep of yours. But after that point, it starts getting easier. Your income from passive stream starts increasing and your life starts becoming easier. Okay, so now you have a little bit of money at your hand. What do you do with it? You do not go and buy a new flashy car or that new iPhone 19 Pro Max. You basically start to invest it. Obviously, you deserve to treat yourself once in a while, but remember to stay in your means. And definitely do not increase your debt to finance that treat. I have to admit it, I do impulse shopping, and most of the time I regret it later. Avoid any unnecessary lifestyle inflation, and not buying something just to show off will give you so much inner peace, which is literally unmatched. Investing has been my superhero. It's been like the Robin Hood, stealing from the riches of Wall Street and delivering them straight to my savings bank account. So where can you invest? Now you can start by teaching yourself, increasing your skill base, increasing your knowledge base about the stock exchange. Start investing in cryptocurrency. There is a lot of stigma associated with risk with the stocks and high risk investments being cryptocurrency. You might lose it all, but remember, nothing in this life comes easy. Everything has a price tag and nothing is risk free. What we can do is educate ourselves and then get going. There are a lot of portals which can give you free advice or dummy accounts which you can practice with. There are a lot of gurus that are available on YouTube teaching you how to do stuff. Make use of them. Start by investing little sums. Grow gradually. Don't get carried away with the greed and emotions, and slowly and steadily you will see those zeros growing in your bank account. Saving for retirement will be your next step. Now let's be honest, most of us do not have jobs that guarantee us to last till we are 65, and we do not have stable economies which can guarantee our businesses will have stable cash flows for the next 10 years. So the need to put aside some of your funds in risk-free policies is the next must thing that you should do. Buy that life insurance or invest in those long-term treasury bonds. Now, the goal here is not to make a lot of money. The goal here is to save your capital. So by the time you retire, you have some funding to fall back on. And last but not the least, keep investing in yourself. Keep learning. Invest in new courses which are available online. Watch YouTube videos of financial gurus which will tell you a lot of new productivity tricks. In short, you can never miss this train, because the amount of data and tech and knowledge that is being added to the world around us, if we miss this train, we will be outdated in no time. So there you have it, 11 years of money lessons in under 10 minutes. If you liked the video, please consider subscribing to our channel so we can bring you more content in future. Till our next video, have a safe day everyone.